compared to yesterday.
Kuwait has started discussing cancellation of oil project tenders.
This is the second consecutive quarter of strong performance.
The dilution will not be very significant. We will still be by far the largest shareholders.
Likely to pave the way for the induction of 32-year-old Neville Tata, son of Noel Tata.
We all know that the self-listing is not allowed. So obviously, BSE has to be, NSE has to be listed on some other exchanges.
Well, definitely it would be a setback for Indian exporters.
Very close to the day's low. We are off around 250 points from the highs of the day.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Rima. And joining us today is Manglam as well. Well, the market's at the low point of the day, guys. Yesterday, we had a bit of a Sergio support that did come in. Today, no sign of him and no sign of the bulls as well. And we have the expiry-related factor as well. I think on a closing basis, you'll at least want to defend this 25,600 odd mark. But selling across the board as we speak.
And now we're precariously close to that 25,600 mark. And it's expiry today and expiry tomorrow because Thursday is a holiday. So the Nifty weekly expiry has been preponed to Wednesday.
The sensex.
Sorry, the sensex. The Nifty is today, sensex is tomorrow.
Yep. You know, just a word on the midcap index, because yesterday as well, the midcap index was underperforming. Even though we saw a dramatic recovery from the lows of the frontline index, the advanced decline was firmly in favor of decliners towards the end of trade, even though those lines came close. But today as well, you know, at one point, the lines were fairly close to each other, intersected, and the green one is below the red one as we speak. 1,800 stocks in the red for about 1,100 in the green. Yesterday's low of around 25, just a little below 25,500 will be an important level to watch, though we're still a fair distance away from that. It's just the ferocity of the fall, because a lot of the options that were written, those option writers were hoping for some support to come by around that 25,670, 25,680 odd mark. As soon as that got taken out, you know, the decline happened much swifter.
And quite a few sectors are actually trading with cuts of more than 1%. The defense sector, 1.7%, realty down 1.5%, consumer durables has got a cut of 1.3%, the pharmaceutical and the auto index also reeling with cuts of about 1%. And in the frontline pack, you've got heavyweights like L&T. Reliance Industries is struggling. That's down 2.5%. HUL, ITC also weak in trade. You've only got an ICICI Bank, which is trying to perhaps fight for the bulls in the large cap space. But other than that, as you know, I think it's the mid cap, small cap screen, which is looking quite weak.
Well, that's right. You know, just two stocks, two sections of the market actually of the Nifty that I want to point out. One is Reliance Industries. As you said, you know, that's come under pressure. I pull up Reliance Industries, but pull it up with the 20-day MA. Now, that's the important mark that we're looking at. Reliance Industries in the last few trading sessions has corrected very, very swiftly from around that 1,600 rupees all the way to this 1,450 rupees odd. Remember, the 200 DMA is coming in around this vicinity. So extremely important that it doesn't breach that mark. That's one part of the market. The other part is the Nifty Bank. Remember, tech, you know, at most it won't fall, but it's unlikely to lead from here, going by what we're seeing on ground. So the Nifty Bank that's actually been, you know, aiding the market in terms of an upward move, that one's holding around the 20 DMA. So both these two levels, the Nifty Bank at around the 20 DMA, you don't want it to breach it decisively, and Reliance Industries at around the 200 DMA, you want it to protect that. How do you position yourself, though, for the final hour of trade? Mitesh Thakkar is back with us. Mitesh, a bit of a bounce is what we saw yesterday, but the joy for the bulls has been short-lived because we're coming for selling yet again. Where does support lie, Mitesh?
Yeah. So I think, you know, we always thought it was a pullback, but I was hoping that the index would at least try and test 25,950 zone. It kind of came back from 25,900. And on the downside, you know, that 25,400 and then 320 remains the two support areas. So, you know, in case we don't recover, a good chance that we'll head towards those levels. I have a sell on two stocks. Indian Hotels is breaking down. So sell with a stop at 692 half for targets of 650. And IDFC First Bank is another one. That's a conditional sell. It needs to break the supports of around 82. Sell below 81.9. Keep a stop at about 83 half. Look for targets of 78.
Okay, all right. Just one factor, Rima. Pull up the Nifty Bank. The Nifty Bank has done 150 points in a matter of 3 minutes, I think. So the Nifty Bank should come up for you on the screen. There's a big uptick is what we're seeing on the Nifty Bank. It's bounced off that 20 DMA, and that explains why it's almost in the green from being down close to under 150 points, and it's helped the Nifty as well recover by close to around 50 points. Yeah, Rima, you're making a point.
No, I was just saying, actually, in the morning when we asked Sudarshan and Mitesh that, does yesterday's price action suggest some sort of a trend reversal? And both of them said no. It was too short a time frame, not enough to convince that, we're out of the woods when it comes to the downturn or weakness that we were seeing for some time.
I just want to ask Mitesh one question on Godrej Properties. Mitesh, the Realty Pack, that's been a severe underperformer all of last year as well, and now starting 2026 with a cut too. Godrej Properties currently at the low point of trade. Do you think there's a visible shorting trend out here, or do you think the selling is overdone in the Realty Pack?
No, I don't think it's overdone, but the only thing is that, because, for example, if you just look at the chart of Godrej Properties, we had a weekly closing at about 1936 way back in February 25, then 1948, April 25, then 1936 again in August 25, one more towards the end of the August was 1947. And now we are breaking out the entire 1940, 1930 zone. So I think this suggests that the decline is going to be much stronger. I would be happy if I get a pull back to about 1930, 41 levels to take a short position over there. And I think eventually the stock could head towards levels of 1700 to begin with, maybe slightly lower.
Thank you, Mitesh. We'll come back to you. For now, let's invite Dharmesh Kant, Head of Research, Chola Securities, on the show. Dharmesh, the biggest stock drag today is L&T. Stock is now down 4.5% at the day's low. What is your analysis and read of Kuwait potentially cancelling orders worth $8 billion and asking for re-tendering? And generally, crude prices are lower, which means Middle East fortunes have also been hit. So their ability to pay also comes down. So companies like L&T, which enjoyed high profits from the Middle East, that also comes into question. How have you all analyzed this news flow for L&T? Because the stock is under severe pressure today.
Yeah, Dr. Rima, I don't think it's anything it has to do with the earning capability of Middle East countries. Though the crude prices are low, I think there's more to it. It may be a US angle attached to such kind of a news flow, but let it be confirmed. I mean, it's not a confirmed flow that this is going to happen. It's just that people are, expecting this to come through. So if it comes through, then definitely it's a hit on the, it's a meaningful hit on the L&T order book. It's not only about this one, because more than 40% of the projects L&T does in the Middle East countries. So those all can come under scanner. And future renewability and future deal wins will be, renegotiated at a new price, which may not be that margin accretive for L&T. So I think that is playing out. And let's not forget the stock price has done phenomenally well. It has, irrespective of the market conditions, the stock price was doing well. So some profit taking on account of such news flows is expected. We are waiting. I mean, 4-5% more decline for here will definitely warrant at least, a trading buying opportunity in L&T. So maybe a bit of more correction tomorrow. If the follow-up correction is there, we would be looking at a buying opportunity as of now. And that is all we can, we can make out at this juncture.
Okay, buy L&T. If the stock drops a little bit more, that's a buying opportunity. But stay on, Dharmesh. There is another important story. So if you remember, towards the end of 2025, particularly in the holiday season, the standoff between gig workers and platform owners like Zomato, etc., hit feverish pitch. The union of gig workers went on a strike. They were asking for more money, stopping this 10-minute delivery. Platform companies also reacted. Dipinder Goyal tweeted about it. His response to it said how much the gig workers earn. Now, this story is important because it affects the profitability of many of these e-commerce, quick commerce companies. So let's get you an important update on that. And this is a CNBC-TV18 exclusive, where Tim C's learned from sources that the Labour Ministry has asked quick commerce players to stop marketing the 10-minute delivery. Let's go across to Tim C for more details.
Well, yes, as you rightly mentioned, what sources are indicating at this point of time is that Labour Minister Mansukh Mandaviya held a series of meetings with quick commerce companies to stop marketing and branding of 10-minute delivery. Labour Minister held a series of meetings with quick commerce companies in the last 1 month, and Labour Minister in these meetings nudged the companies to discontinue the branding of 10-minute delivery to protect the rights of gig workers. Union Minister Mansukh Mandaviya, sources claimed, has persuaded during these meetings the major delivery aggregators to remove the 10-minute delivery branding and marketing. Also, these meetings were held with leading platforms, is what sources indicated, which included Blinkit, Zepto, Zomato, Swiggy, to address concerns related to delivery timelines. Other aggregators, according to these sources, is that they are expected to follow suit in the coming days. And sources in the nutshell actually said that this move is aimed at ensuring greater safety, security, and improved working conditions for gig workers. Meanwhile, CNBC-TV18 has reached out to these quick commerce companies and is awaiting their responses. But yes, as of now, sources indicating that Labour Ministry has managed to nudge these companies to stop the 10-minute branding and marketing. They might be able to deliver in 10 minutes. That can still be the case. But when it comes to marketing and branding, that needs to be addressed with this nudge, is what Labour Ministry sources are saying.
Take that point, MC. Thanks a lot for that. Just 2 points from a stock market standpoint out here, right? They need not brand it as 10 minutes anymore for people to know what exactly quick commerce is. If you say the word Blinkit, if you say the word Zepto, if you say the word Instamart, people know that things come instantaneously. And the other part is that whether you use the 10-minute branding or not, there is no disincentive for the delivery not being in 10 minutes or not being made in 10 minutes. So there is definitely no disincentive for the rider to actually deliver it within those 10 minutes. So there's no rush out there. Oftentimes when you and I use those products, you will get those products in 16 minutes, sometimes 18 minutes. It's not 30 minutes, neither free offer, right? It's a 10-minute branding which they've used. So the government's just basis what Tim C is saying, what we understand is just ask them to remove that 10-minute branding. It's a branding, not a guarantee. Yeah. That's point number one. Secondly, if this is done to basically, ensure safety among people, etc., the gig workers, it may not be the case, because the incentive of the gig worker is to deliver as many products as they can or make as many deliveries as they can in the matter of the day that they are working at. So if, whether a company says you have to deliver it in 10 minutes or not, the fact is that if I'm a gig worker, if I don't deliver it in 10 minutes or as quickly as I can, I won't get my next order. So my earnings per hour will be reduced. So does this incentivize the gig worker to deliver faster? Definitely not. So those are two important points that we need to watch out for. Any other changes which are marketing related would perhaps be just cosmetic and not impact the stocks, which is why we are not seeing a big gash on either of these stocks. So this is not a business risk. This is just, just a nomenclature sort of thing which changes.
Okay. All right. Mangalam, thanks a lot for making sense of that. Dharmesh, coming across to you for your view on them. But by the way, keep your eye on the bottom of your screen. L&T has come in there. They are clarifying. They are saying that the projects that were referred to in the said report were not part of their, of the order book. They've clarified with regard to the Kuwait discussing cancellation of the oil projects. The stock was down post that clarification that's come in there. We've seen a bit of a recovery. The stock actually is cutting its losses. A few minutes ago, it was down close to around 4%. But the street taking note of that, the clarification that they put up there. That's where we're seeing the stock actually has bounced off the low point of the day. Yeah, all right. Those are the flashes that come up on the screen. Dharmesh, you want to come in on Eternal and Swiggy?
Yeah, good afternoon, Nigel. The point Mangalam made was totally valid. How it should be structured is distance-wise delivery time. So that will save not only the gig workers, but also the commuters who are on the street. Sometimes the yellow bikes are so low that you don't even notice from your car that the guy is passing, and signal jumping is quite rampant out there. So, definitely this 10-minute rule should not be there as a branded. But at the same time, they should structure it like 1 kilometer, 2 kilometer, you do in 10 minutes, and 5 kilometer in 15, 20 minutes. So that will be well welcomed out there. Valuation-wise, I still think both Eternal and Swiggy is far-fetched on profitability front. Cash burn is continuing, and this competition is hitting up. So such trading pops if it is there. And if you are invested for a long time, it's good time to lighten on Eternal and Swiggy if you are holding as an investor. So that's our house view and call on both the quick commerce companies, because 75% is through quick commerce now, and I don't see a light at the end of the tunnel.
All right. You don't see any light at the end of the tunnel for these quick commerce players when it comes to profitability. Dharmesh, we'll come back to you, because another stock which is reacting very well to its third quarter numbers is ICICI Pru. Yash joins in to tell us more about the internals of these numbers and why the stock is higher. Yash.
Well, Mangalam, three important things. Of course, as far as the top line is concerned and the value which comes out of that top line is concerned for ICICI Prudential Life Insurance. As far as the top line is concerned, not a very impressive growth. The expectations from the street were on the lower end. The growth which has come about as far as the annualized premium equivalent or APE is concerned is just about 4%. Very modest growth, but that is as per the low expectation from the street itself. But what has indeed surprised the street is the value that they've been derived. They have derived out of the top line growth. So your value of new business that has grown by 19%. Which is a very strong growth at 615 crore rupees. And the margins, particularly impressing the street as far as the margin performance is concerned, VNB margins coming in at about 24.4%. This is, of course, as compared to 21.2% on a year-on-year basis, about 300-350 basis points margin expansion on a year-on-year basis. The street was expecting a number of 23.2%. It's come about 100 basis points higher than that as well at 24.4%. So particularly the value is what the company has been able to derive from its top-line growth is what has impressed the street, and that is largely because of a favorable product mix which ICICI Prudential Life Insurance has been able to do in the third quarter.
One more word, Yash, you've learned from sources that an IRDAI consultation paper on regulating commissions is likely to be put out next month. So what have you learned? What could be the contents of this paper?
Well, this is very important for the entire sector. The street has been, waiting for that important consultation paper from the insurance regulator when it comes to regulating insurance commissions. There have been, of course, comments which have come starting from Finance Ministry to the regulator, IRDAI, and, of course, the Reserve Bank of India as well as far as the financial stability report is concerned. What we've been given to understand is that the insurance regulator, IRDAI, is likely to release the consultation paper when it comes to regulating insurance commission as early as next month itself. There is certain amount of process which will happen in the current month as well. What we've been told as far as the details of the consultation paper and the likelihood of what comes through is concerned, IRDAI is likely to suggest capping segmental commissions and lowering expenses of management limit. What this means is that IRDAI is likely to suggest moving to the older regime of having segmental commissions, which means that you can pay up to a certain limit when it comes to motor, up to a certain limit when it comes to health, term life, so on and so forth, different life and general insurance segments. Also, currently there's a limit on expenses of management under which commissions fall, and that limit is expected to be rationalized further, which means brought down further, continuing with the cap at the lower point, which means the IRDAI is looking to essentially pin both ends of this particular dimension, where under one circumstance they put segmental commissions, and on the other hand they rationalize expenses of management limit and continue with the caps on that side as well. What we've been given to understand is that all nodal departments of the regulator, that is life, non-life, distribution, actuary, all of them are expected to give their suggestions on this particular proposal by end of current month, and next month is when that important consultation paper on regulating commissions can be expected from the regulator's door.
All right, Yash, thanks a lot for that. So those are important news pieces that have come in so far. Dharmesh, you heard Yash on both ICICI Pru and the commission-related issue, which the regulator has been speaking about quite vehemently over the last month and a half or so. Do you think that some of the listed companies get impacted by lower commissions out here? And your view on ICICI Pru's numbers?
Yeah, definitely, Mangalam. I mean, if they lower down on the expense ratio and all the, permutation combinations they have been working on, it will have a hit on the profitability. I mean, that's the objective of the regulator, to rationalize the expenses on the part of, for the benefit of the consumer. So that is definitely there, but these are all still not, it's in a formative stage. So unless a firm, black and white regulations comes through, it's hard to, take a call on from a long-term perspective. Even from trading perspective, one can go long. ICICI Lombard numbers were okay types. VNB margin was, I mean, that VNB growth was good, but at the same time, it was more or less so kind of numbers. What we are, really looking forward to is Life Insurance Corporation of India business report this time around. Business update was, strong based on a favorable base effect. But if the numbers are also true, valuation wise, that looks the topic out there. I mean, they are trading at 1/4 of the valuation multiples. So we are having an eye on, insurance companies. LIC looks the best bet from a long-term perspective. But otherwise, like PB Fintech and all, we are avoiding as of now till the clarity and cementing of the regulations takes shape.
By the way, recovery in the markets. The Nifty was on the brink of breaching the 25,600 mark on the way down. Now we've climbed to 25,700. The Nifty Bank has put its head above, in the green line, 63 points up. ICICI Bank is a big mover. But outside of that, ONGC is your top gainer. Eternal going strong, 3% up. A couple of IT names also in the green line. Tech Mahindra inching towards a 2% gain. TCS up nearly about 3/4 of a percentage point. So some recovery afoot in the markets. The Midcap index was down 1% when we started the show, now down close to about 0.5%. Ramesh, what is your read of the IT numbers that have come through on HCL Tech and TCS? I was reading some notes on HCL Tech because the numbers look good. Q3 was a decisive beat at 4.2%. They raised the services guidance also, but the stock was struggling. And then you see that the valuations of HCL Tech at 23 times forward multiple is actually maybe at par or slightly premium to an Infosys or TCS. So maybe analysts believe that it's priced in, which is why you aren't seeing incremental interest in HCL Tech at this juncture. In the large cap space, first give us your read of the IT numbers. Do you like anything? And is there a read-through for the other companies, other stocks in the mid-cap IT space?
Yeah, the mid-cap is a totally different play from the large-cap players in the IT space. So going by the numbers of HCL Tech and TCS, again, the valuation disconnect is what is, troubling. And if you look at the numbers and if you look at the numbers reported in INR terms, not in constant currency or the US dollar, because that is what matters as far as the INR numbers are concerned, is despite of a currency tailwind, even 8% kind of EBIT profit growth is, it's too far lower number. So what we are expecting is 2 or 3% kind of a profitability growth for FY26. And going into 27, it can be a mid-single digit, say 5 or 6% kind of a PAT growth. Because business-wise, vertical-wise, what we analyzed was we don't see a turnaround of say 10-15% kind of a growth coming in there. And then if you are looking at 23-24 times 1 year forward PE multiple, it does warrant a careful attention, and that's the reason why I think the stocks will languish or will see a mild correction playing out there. TCS, on the other hand, return ratios are far higher than that of HCL Tech. TCS is an ROE 50%, whereas HCL Tech has an ROE 25%. So some trade-off out there may still play out. But we see this as a trading or zone-based kind of a rallies. Nothing meaningful or structural upward swing we don't see happening in IT companies as far as large caps are concerned.
All right, we take that point, Dharmesh. As before we slip into a short break, just pull up Apollo Tyres. It's zooming ahead, up around 4% from the lows, currently sitting with a gain of almost 3%. Was in the red for a bit in today's trading session, but continues to surge. Apollo Tyres, and looks like in the tyres pack, this is the only one which is at the high point of trade right now. I looked at MRF, looked at CEAT, haven't seen a spike on the others, but right now Apollo Tyres seems to be the only one. CEAT is the other one which has actually moved higher, but not so much for MRF, which continues to stay in the red. We'll take a short break, come back on the other side. Dinshaw Irani of Helios Mutual Fund joins in.
ETF and index funds are passive funds. They replicate an index created by agencies, let's say BSE or NSE. Over here, fund manager does not have a discretion. They will exactly replicate the index. Now, ETFs are index funds traded during market hours. Index funds are available at the closing day NAV. So for an active trader, tracking ETF makes sense. For a normal investor, index fund is good enough.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
अरे टेंशन किस बात की? सेंचुरी प्रोवुड का प्रीमियम प्लस है ना, लो एमिशन है, हाई डेंसिटी है, वाटर रेजिस्टेंट भी, टर्माइट एंड बोरो रेजिस्टेंट भी है। यानी ये है जहां नो टेंशन वहां।
प्रीमियम प्लस बाय सेंचुरी प्रोवुड। अगर शूज में फुल फ्लेक्सिबिलिटी चाहिए तो इन्वेस्टमेंट्स में क्यों नहीं? अब अपने इन्वेस्टमेंट्स को दो फुल फ्लेक्सिबिलिटी का एडवांटेज विद फ्लेक्सी कैप फंड्स। टाटा म्यूचुअल फंड की एक निवेशक शिक्षण एवं जागरूकता पहल। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना संबंधी सभी दस्तावेज सावधानी पूर्वक पढ़ें।
माही भाई कोई कूल बैंक बताओ ना जो कस्टमर के साथ हर कंडीशन में हो।
फिर तो SBI कूलेस्ट है। हाँ? 50 डिग्री में, -40 डिग्री में, घने जंगलों में, भूकंप वाले टापू में भी हर कंडीशन में कस्टमर के साथ है।
रियली कूल।
SBI, the banker to every Indian. Truly.
तो पूरे एक्स्ट्रा सेव और सेव और डालो ना।
सेव से इतना प्यार
और सेव
तो फ्लिपकार्ट रिपब्लिक डे सेल पे सेव करो।
6x6 are your glasses okay? It's blue. The grill is different too. So is the inside. Dad's Hector doesn't have these wheels. Guys, 6x6 is right. It is Hector. See, I told you.
With segment's first iSwipe touch gesture control and many more incredible features. The all-new MG Hector, designed to surprise.
सुरेश
जी भैया,
प्लीज इसका ख्याल रखना।
जी जरूर।
अच्छा, 2 दिन गांव क्या जा रहे हो तो इतनी चिंता हो रही है? हमारे बारे में कभी सोचते हो ऐसे?
अरे सब अच्छा ही होगा। मेरे रिक्शा यूनियन ग्रुप ने LIC का ग्रुप माइक्रो टर्म एश्योरेंस प्लान जो लिया है।
पापा।
अरे वाह, अब चाहे जो भी हो घर के पहिए चलते रहेंगे।
LIC का ग्रुप माइक्रो टर्म एश्योरेंस प्लान, परिवार का भविष्य रखे सुरक्षित।
Welcome back. Good recovery is what we've got from the low point of the day as we speak. We're getting some news, heartbreaking news actually, that's coming in there. The BCCL coal mine in Asansol collapses. Several workers appear to be trapped inside. We're waiting for further details on that front. Just prayers to all those who are, who have got trapped out there, and hopefully there are no fatalities out there. So. Hoping things are pretty okay, at least on that front. Remember, in terms of a financial news point, you have BCCL that the IPO is closing out with subscription of close to under 100 times. But that's secondary for now. The safety of the workers is something that we're looking forward to, and hopefully we get some kind of clarity on that front itself. Well, let's welcome our next guest then. We have Dinshaw Irani, CEO at Helios Mutual Fund, who joins us on the show. Hi, Dinshaw. Good to see you, Dinshaw, this afternoon. Everyone started 2026 with some optimism, hoping that it's going to be a good year. Well, the first couple of weeks have been anything like that, right? We don't know what's flying around in terms of news flow. How are you feeling about this year? And also, because of the underperformance we saw in 2025, and over the last few trading sessions, in the first couple of hours itself, the Nifty is down 100 points, your stock's down 5%. How bad a year could it be? Are you in the camp that believes we could actually see a big price correction in the broader markets yet again?
Nigel, first of all, thank you for having me on your show, and a very good afternoon to you, your team, and the viewers. Nigel, actually, it flummoxes us also. I mean, if you look at how the macros are placed out, it seems like a decent year going forward. In fact, 25 also wasn't that bad a year, given that all the kind of negatives were thrown at the markets, be it the tariff tantrum, or be it the war between India and Pakistan limited time war, or for that matter, the quarterly numbers, which are not that exciting. But still, the market did fairly well. So from here on, I think mainly it's mulching those small amount of gains. But our feel is that 26, the quarterly numbers are expected to be good going forward. The government and the central bank both have done a great job in fiscal, basically giving out more liquidity in the system as such. And that should in fact work towards at least on the demand front. And that's why we believe that the going forward quarters should be looking very exciting. September, if anything was to go by, I think December also will be that kind of a number, a mid-teens kind of growth earnings number, where obviously the large caps won't grow as much as the overall numbers, but the mid and small will outperform. So our feel is that the mid and small are the segment to be in this, and that's a very aggressive call actually. And in fact, today also, you've seen the market did make an effort going up, but somehow in the middle, selling happened. I think the world is very angry with us for some reason, the FPIs rather. So let's see how that pans out.
Seems that the world may be angry, but we are recovering from lows. That's exactly what happened yesterday as well. Today too, we at one point were at the danger of breaching the 25,600 mark. But from there, we've seen a recovery, and the Nifty is back above that 25,700. And it's the IT pack as well as the Bank Nifty which is powering ahead. The IT pack is off lows currently. The index is 0.5% higher, and we have the Nifty Bank as well, which has bounced off almost 120 points in the green for that index too. Dinshaw, but it's a bold call that you said that you are expecting business earnings to recover and the mid and small caps as a good place to be in right now. Any fresh purchases that you've made? Any specific sectors / names that you can divulge?
So actually, Magalam, the fact is that we have a small cap fund, and there are some 60, 70 odd stocks out there where we've been purchasing every time we see some kind of a correction in the markets, and obviously the fresh money has to come in for that. But I won't give you names as such. There are no new names that we added of late, but we've been fairly comfortable with that pack. Given that the earnings growth there is going to be much higher than the mid and the large cap segment, we are more comfortable with the small caps. In fact, if you discount the price earnings by growth, which is the price earnings to growth multiple, it works out roughly around close to 1.1 or so for that segment. And that's what keeps us fairly optimistic in that segment. If you go down the chain, the mid caps is at a PEG of 1.5 and large caps are somewhere close to around 2. So I think this is the segment to be in. And if at all you want to take better bets, obviously you can spread your risk with mid and small also. Mid and large, sorry.
But Dinshaw, what are the triggers going ahead? In terms of rate cuts, we've already had it front-loaded, 125 basis points done. The government did what it could in terms of putting money in the hands of the taxpayers. And even earnings recovery coming to mid-teens is well advertised and perhaps anchored into the prices also. It's not something that's going to take everyone by surprise. We've been expecting a pickup in earnings. So what are the fresh triggers to get us out of this slump?
So, Reema, actually, the rate cuts have been fairly aggressive, but you have seen that it's not trickled down to the end consumer. The yields have remained firm. I think that's where the reversal has to happen before that. And I think it's a quarter or two before that reversal happens and trickles down to the actual consumer when he starts buying. So this euphoria that we've seen is purely on the back of GST rationalization and not rate cuts getting passed on to the end consumer, right? So that's going to happen later. That's one. Secondly, you said that it's well advertised, the mid-teens kind of growth. But the fact is, it always surprises. I mean, the last quarter was expected to be mid-teens, given that there was a pent-up demand which was creeping in. And obviously, the base also was very low. If the same continues into this quarter, please understand the last December quarter wasn't as bad as the September quarter of 24. December quarter was a 3-4% growth quarter. So on that growth quarter, you're showing mid-teens kind of growth. You really cracked it big in terms of growth numbers as such. So I think that's going to work out. Inflation is going to remain benign. The way RBI is after throwing liquidity in the system, rather easing as such, I think that also will work out going forward. And obviously the biggest I think the euphoria that we have is on the labor pool today. The millennials, the Generation Z is around 38% of this pool. And obviously, this has not happened overnight. This has happened over a period of time. But please understand, I mean, I've got 2 Generation Zs at home and I know how aggressive spenders they are. So I've got full faith that this is the segment which will pull up the domestic consumption plays. And obviously, the financiers to that domestic consumption will follow suit.
All right. Talking about a quick couple of stocks, Dinshaw, before we let you go. Swiggy and Eternal were, I think, you were tossing up between the two. You'll continue to remain your positive stance, and between the two, what is the preferred one? You could correct me if you'll have already exited positions out there. And Ola, the last time we spoke, I recall that large trade got out of the way, and you all said you'll believe it's still good for more. I think the stock has bounced up reasonably from those lower levels. They pulled back some market share in December. Your view on both these two, the electric vehicle space as well as the delivery space?
So basically, Eternal and Swiggy both remain with us. We are fairly clear that the end winners are going to be these two. I mean, whatever you may say, whatever the competition is saying, the fact is that globally, two players survive, and probably the two who survive are normally the first movers. And both these guys are probably, if anything, not first movers, but they're equal movers as such. And I think both of them will survive. If you want weight-wise, Eternal is much higher than Swiggy for us, because I think Swiggy is yet to get the game right, in the sense, at least on the Zepto front, he's yet to get that game right. Eternal has got it perfect as such. So let's see how the quarterly numbers come out. And obviously, our faith in both the stocks is fairly high. We continue to hold going forward also. In terms of Ola, well, I had said earlier also that though it's a tech company, but the bread and butter for the tech company is the two-wheelers, EV two-wheelers, that is. Once the market shares start moving up, that's when we'll start looking at this. They did show a gain in December in terms of market share, but the same hasn't held out in Jan. So we'll wait for some sustainability before taking a call on the stock as such. Otherwise, we keep on holding on to our old positions.
All right. So you haven't trimmed any positions despite the drawdown that we've seen from the top on that stock, right?
No, in fact, the last tranche of that offer, which was happening from the promoter end, did pick up a bit.
Take that point. Thank you so much, Pinchot, for joining in and giving us your outlook on a lot of sectors. You like the small and mid-cap space in particular. Believe earnings will come back, and holding on to your positions on these quick commerce, new age platform players as well. Speaking about those quick commerce players itself, Eternal has moved to the high point of trade, and Swiggy too has moved into the green. As we are pointing out that this nudge from the Labour Ministry may not make a big business difference to these companies. The streets perhaps taking note of that, those stocks of those lows. But are all the stocks off lows? Perhaps not. Hormaz joins in his stock check of the market move in the new year so far. Hormaz, some interesting data. Take it away.
Well, the market may have seen some recovery in today's session, but the first 9 sessions of 2026 have been anything but quiet. And if you take a look at the market moves as well, the Nifty is down almost 2% in the first 9 sessions of the year. The Nifty Bank, courtesy of only ICICI Bank, has managed to outperform in relative terms. The mid-cap index is down a similar quantum, almost 2%, and the gash is far bigger in the small-cap index, almost a 3% cut if you see. But for the Nifty itself, it's been even Stevens even after this 2% fall. 25 stocks trading with positive returns, 25 trading with negative returns. Now, if you take a look into the Nifty mid-cap index, we have 65 out of 100 names that are trading with negative returns so far, and 8 stocks are trading with losses of 10% or more. If we go further into granular details, there are over 22 stocks that are trading with losses between 5 to 10% on the mid-cap index. Now, on the small-cap front, the situation is a little worse, because 75% of the stocks are trading with losses in the first 9 sessions of the year. The 6 stocks are trading with losses of 10% and more, and over 30 stocks are trading with losses between 5 to 10%. So almost a fourth, almost 4/10 of your index is trading with losses of anywhere between 5% to 20%. One standout name among the Nifty constituents is ITC. It's down almost 17% so far this year. That is, of course, of the New Year's Day's move that the stock saw on the downside. And the last instance of the stock seeing a double-digit move on either side in the month of January goes all the way back to 1998, when the stock had gained or declined actually 12-odd%. Now, among the broader market losers, among the top names, you see Vari and Premier Energies. Ever since they have entered the F&O space, there has been relentless selling pressure here. Godfrey Phillips, in line with ITC, is also down around 20%, and along with the capital goods names, down 11% so far. In the small cap space, Allied Blenders, that stock saw its shareholder lock-in end recently, is down around 21% so far this year. Signature Global, after a poor business update, Elecon and Tejas Networks earnings reactions, and Ather Energy, after hitting record high levels, is seeing some profit booking. So the index may not have seen significant moves, but the broader markets is telling you the actual story as the stocks being down but not out, at least as of now.
All right, Hormaz, take that point. Thanks a lot for that. Meanwhile, we have some sources to Reuters at the bottom of your screen. Red Tape's seeking buyers as founders eye stake sale up to $500 million. The stock's seen a rise on the back of that news. Founders have reached out to Blackstone, KKR to invite interest in their stake. Red Tape founders also own Mirza International, so want to see if there is any rub-off impact on that stock as well. So the Mirza stock comes up for you. As of now, this is what sources are telling Reuters. I'm just doing a back-of-the-envelope calculation here. The the market cap of Red Tape currently is closer to 7,000 crores, which is roughly $80 to $90 million, rather $800 to $900 million. The promoters of the company own 70%. Stake about 70%. So $509 million, if Reuters' story is to be believed, then they're actually selling at a discount, which is not a big positive. It's a great brand. There is Blackstone, there is KKR, etc. And if it's saying that the founders have reached out to them, then obviously the prices won't be as big a premium as the stock price rally is suggesting. Again, this is a source-based story, sources to Reuters, and back-of-the-envelope calculations of the story suggest that the sale may happen at a discount.
All right. So that's Mangalam. Red Tape, the current market cap, if I got it correct, it's approximately 6,500 crores.
Exactly.
Or
about 7,000 crores.
Got that. All right. And okay. All right. Yeah, perfect. Approximately. So it's there's no big premium as such.
There is no big premium. I mean, if the current market cap is close to around 6,500 crores or closer to 7,000 crores, then you are looking at a promoter's stake, which is worth nearly 5,000 odd crores. 5,000, and if the promoter's stake, as per that, is deal is worth $509 million.
Yeah, so it's in line
at par, or maybe slightly at a discount. So the question is whether this happens or not. One, and second, if this does happen, is there an open offer and all these things? We've seen many a story on Red Tape through the time that we've been here. So let's see how that pans out. We'll take a short break, as always. On the other side, a check on what the dealing rooms are saying in our special DStreet Chatter segment. Also get you buy today, sell tomorrow calls.
Got you dancing. Now we go back and forth steady with the prancing.
Everything's new except the attitude. The all-new Seltos. Badass forever.
Kia, movement that inspires.
ये हथेलियां बड़े वादे कर जाती हैं। मासूमियत से जो पकड़े कान तो माफी पक्की समझो। जिंदगी भर साथ निभाने की कसम एक छोटी सी चुटकी।
जिंदगी के हर मोड़ पर आपका साथ देने का हम आपसे वादा करते हैं। एजेस फेडरल लाइफ इंश्योरेंस, हर वादा मुमकिन।
The best investment one can make in life is finding the right life partner. That's why we created VIPshadi.com. Register now.
तेरी एक जिद और फैक्ट्री वर्कर्स सब डबल।
रिटायर हो जाऊं क्या?
अच्छा, प्रॉपर्टी के अगेंस्ट लोन का आइडिया किसका था? पर बुढ़ापा आ गया हो।
इनकी जिद ने कारोबार भी बढ़ाया और रोजगार भी। टाटा कैपिटल लोन अगेंस्ट प्रॉपर्टी के साथ।
Flowing through India's skyline for 50 years, Purvankara, the art of development since 1975.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ।
सोच बदलो और बैंक भी।
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC-TV18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
Look, Hector! 6x6. Are your glasses okay? It's blue. The grill is different too. Who's the inside? Dad's Hector doesn't have these wheels. Guys, 6x6 is right. It is Hector. See, I told you.
With segment's first iSwipe touch gesture control and many more incredible features. The all-new MG Hector, designed to surprise.
Welcome back. Oil India continues to do well, up around 5.5% of that stock. ONGC is the other one. So a lot of these upstream oil companies doing extremely well. Brent at around $65 per barrel as well. You're watching us here on Closing Bell. We are live to you. We come live to you from the CNBC-TV18 Motilal Oswal newsroom. And time now for our favorite segment, DStreet Chatter. Nimesh gets us an insight into what dealing rooms are saying and a few tidbits about the stocks that are up and about in trade. Nimesh.
A bit of a volatile day of trade. We've seen a bit of a recovery in the last 30 minutes of trade, and I guess that's largely to do with an MOC basket buying. There was a sense in the morning that a leading FI has got a decent size MOC basket, which normally plays out in the last 30 minutes of trade. All MSCI related stocks in that basket, so maybe that explains a bit of an uptick in the Nifty as well in the last 30 minutes of trade. But otherwise, from a sector perspective, the only sector which stands out and has relatively outperformed of late is metals, and there is where I understand the buying flow continues, and a lot of institutional interest is there to buy into metal names, so that stands out. Technically, 25,450 is a level to watch on the downside. If that gets taken out, then there is going to be a big fall, is what the sense is. Generally, the sentiment has turned quite negative of late because of the kind of sell-off we've seen. But frankly, from a flow perspective, I guess today's recovery in the last 30 minutes could to do with a bit of a MOC basket buying at a leading FI desk.
What about stocks, Nimesh?
Well, so the first stock that stands out today is SBI. I've been saying for a while now that within the financial there is a bit of churn happening, and SBI and ICICI Bank stands out. Even today, I understand there is limit buy orders in SBI from a leading FI desk. So some institutional interest seems to be clearly there in SBI, even at current levels. So that's the first stock which is relatively outperforming in today's market. So that is the first one is SBI. Flows have been quite mixed, is what my sense is across large cap names as well. The one stock which stands out of late is Chalet Hotels. It's been consolidating, but haven't collapsed in the broader market stock, so to speak. And one of the reasons is that one domestic mutual fund has been an active buyer as well in Chalet Hotels of late. There was a clean out trade, is what I understand, from one of the domestic mutual funds recently, but that got cleaned out, and now some domestic mutual funds are buyer as well. So these are the few names that stands out today: SBI, Chalet Hotels. Very selective buying, but broadly today's market recovery seems to be because of that MOC buying.
Thank you very much for that. SBI is up 5% since the start of the year, while HDFC Bank is down 5%. So that rotation that Nimesh was talking about is indeed playing out. Mitesh is now back with us for a few BTST calls. Mitesh, any thoughts on SBI? And then tell us what's on your list.
SBI is making a fresh high, and this is one stock which is kind of keeping the Bank Nifty outperforming and still continues to do that. I think as long as the stock is above 1,010, 1,009, I think the short-term trend will be on the upside, and the targets haven't been achieved, which is about 1,060, 65 to begin with, but possibly even 1,100. So quite positive on SBI.
All right. Yeah.
Sorry.
Go ahead.
Yeah. So coming to the stocks, I think Max Health is rebounding from oversold levels. So that's a BTST. Will keep a stop at about 1,020. Sorry, 1,020, and look for a target of around 1,050. And Emphasis is another one. Emphasis is a buy or BTST with a stop at 2,862 for targets of 2,900.
Okay. All right. Thanks a lot for that, Mitesh. In fact, Emphasis moving with some solid strength in the last few minutes. And just one more stock, JTL. One of those big underperformers. Yesterday it was up 20%, and then they won that order. The stock was actually down, a couple of hours ago. I recall at around noon. JTL has now spiked up, suddenly up close to around 85%, following yesterday's 20% move. Big uptick is what we're seeing out there. Quick check on the F&O space. So we're having a weekly contract that's getting expired right now. The markets have seen a good recovery actually from the lows. L&T is the stock, post that clarification that they put out. That stock, in fact, has bounced off the lows. And the Nifty Bank, that continues to trade above the 20-day MA. So that as well is heartening from a bullish perspective. To give you a couple of levels, well, the high of today is around 25,900. The low of the day is around 25,600. So it doesn't appear that either of those two levels are going to get violated. The Nifty, well, at around the 25,700 call, we saw aggressive writing. So that's giving you a heart that, just in the next 30 minutes or so, we shouldn't get past the 25,800 mark, because the premium from around 130 rupees, that came down to around 14 rupees. And now, in fact, it's popped up again because the Nifty has bounced up. So currently holding at around 35 rupees. Individual stocks that are in focus, we're seeing fresh buying on SBI. So big open research out there. The stock has well moved up. Nalco, well, that's seeing a bit of a short covering bounce, in trade today. So that one as well comes up on your radar. And ONGC is seeing some fresh buying in today's trading session. So good move is what we're seeing on that one. Sale, we'll have to keep an eye out on that stock. The last couple of trading sessions, there has been some unwinding of positions. So in the next couple of days, probably that one could stand a good chance of actually coming out of the F&O band. We'll keep an eye out on sale. That as well could come up for you on the screen. Let's move on, though, and let's get in Jay Bala, CMT cashchaos.com, who joins in. Jay, that date with higher levels, you can't, is what you have been telling us. But where do we head first, Jay? Do you think the markets are looking like they want to visit 25,000 first and then move up? Or do you think from here on we'll gradually see that recovery to those levels? I think you're predicting a much higher level from here on by the end of this year. Go ahead.
Hi, Nigel. Thanks for having me on your show. I pointed out last few times that if Nifty were to break below 25,690, it runs the risks of going and revisiting the August lows of last year. So that's about 24,400. It's probably could go below that and touch somewhere about 24,000. So the interim support for the market, though, is around 25,250 to 25,100. I think unless markets reverse immediately from here, I think the risks of markets revisiting the August lows of 24,400 is higher. I would put that as a higher probability event. As I pointed out a few weeks ago too, shorting this market is going to be a little bit difficult. Exercise a bit of caution. Once 25,100 is broken, I think the shorts between 25,100 and 24,000 will get a little more easier. But that doesn't impact our medium-term picture that I've been maintaining since the April 2024 low, that the market is heading to 29,000. So this potential visit to 24,400 is going to merely delay the onset of the market's move to 29,000 by a few weeks, probably a couple of months. But the medium-term trend remains intact. The short-term could get a bit negative from here on.
All right, the short-term negative, but medium-term remains intact. Your targets of 29,000 on the Nifty. If the market were to move to those levels, what would be the components that would take it higher? Obviously, the three big weights, banks, IT, and Reliance. What is your call on either of them?
See, we shouldn't be focusing on that now, Mangalam, because if the markets were to go down to 24,000, we'll be left with a mark-to-market loss, which in my trading books is a no-no. So let's wait for the market to confirm that this is, the recovery the market saw from yesterday's low is actually trying to put pressure on the all-time highs. But I put it the other way. If the markets were to go down, I think it will be the capital goods space and Reliance. Reliance could revisit the September lows. That's about, about 1,300 odds. But then again, Reliance is painting the similar picture to the Nifty. In fact, I would say Reliance could be the reason for why the Nifty is looking like this. So exercise a bit of caution. The autos, metals, and real estate could be the candidate, but that focus should come much later with the markets is starting to put pressure on the all-time highs.
Reliance, you said, is headed down to 1,300. We're currently at 1,450.
That's right.
So should we play for the downside? Can you go short now at this juncture?
Yes, I'm always very cautious when playing Reliance on the downside. It's a very tricky trade to play. But yes, if you are having greater risk potential, yeah, it can be played short. The potential is about 1,340. I don't think Reliance is heading about 1,540 in the short term. But yeah, Reliance always comes with a risk on the short side. So potential for 1,340 with a stop loss at 1,540, 1,525.
Last earnings on Friday, post-market hours. So, and it's already down 7.5% since the start of the year.
Jay, any individual mid or small cap stocks that stand out in terms of charts?
Yeah, I think the chemical space is starting to look interesting. Navin Fluorine and Aarti Industries, Aarti Chemicals, I don't recall the exact name, Aarti Industries, yeah, I think. Yeah, so these two names are looking interesting from a very short-term perspective. Navin Fluorine could probably get to 64.50 as long as it holds above 56.50. So you can use that as a stop loss. There's even a large cap that looks interesting from the IT space. Wipro looks interesting with a stop loss of 259. Be free to give these two calls a pass because we are in a in between phase. You might want to stand out of the market and protect your capital, or you might want to get into this with very small positions.
Got that. All right. Jay, request you to stay with us. We're going to take a quick break. Come back. We'll get Jay's remaining views. We'll also wind down the weekly expiry. But we'll have more market talk on the other side. Stay tuned.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Look, Hector! 6x6. Are your glasses okay? It's blue. The grill is different too. So is the inside. Dad's Hector doesn't have these wheels. Guys, 6x6 is right. It is Hector. See? I told you.
With segment's first eye-swipe touch gesture control and many more incredible features. The all-new MG Hector, designed to surprise.
Non-stop entertainment in the sky. That's Air India now.
Whenever I ate ice cream, I felt a sharp sensation in my teeth. It kept building up. I kept ignoring it. Then the dentist told me that the upper layer of my teeth had worn off and nerve endings are getting triggered by eating this cold ice cream. My dentist recommended using Sensodyne daily.
Sensodyne goes into the teeth and calms the nerves.
I can now eat my ice creams. I can now have ice in my drinks. Sensodyne works.
शिव प्रसाद जी को बीमारी के कारण 15 बार हॉस्पिटल में एडमिट होना पड़ा। पॉलिसी बाजार की टीम ने उनका लाखों का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
With Skoda Supercare and growing network across 180 plus cities, you never drive alone.
Skoda.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
छुट्टी पे तो चिल कर।
मेरा बैंक मुझे चिल करने देता है। इंटरेस्ट पता कितना देता है? इतूसा, और वो भी हर 3 महीने बाद।
Not banking with AU?
AU? AU? AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
Every month. सोच बदलो और बैंक भी।
Welcome back. Less than 5 minutes to go before we wrap up the trade. Looks like the Nifty will manage to close above the 25,700 mark. Brent crude price made a big move overnight. Today, it's now at $65 per barrel. This is after the U.S., Iran, the sanctions on Iran. We've seen a significant surge in crude oil prices. Jay, do you want to give us some levels on Brent crude prices? It just looked like Brent crude prices, were subdued and it's going to stay like that. But now there is a sudden flare-up.
Hi, Rima. If you've been reading my notes for the last few weeks, I've been pointing to a bump up in crude prices. I've been pointing to NYMEX rising to somewhere about 61.5 to 62.5. This is well within the expectations. But here are the possibilities that could happen. I'm anticipating this bounce to get stopped at about 61.5 for NYMEX, and then head back to fresh lows below the 2025 low, somewhere about $52 to $50. But if Brent were to, if NYMEX were to cross 66.5, then there is a risk that it's going back to the July highs of about 78 odds. That's so when it comes to Brent, it's about a little bit higher. That's probably about $79, $80. So watch 66.5 on the WTI as a very important level. I'm not anticipating that to get crossed. In fact, I'm anticipating crude to get stopped at 62.5 and then turn lower. If that doesn't happen, then it's going much higher.
Oh, all right. Hopefully it doesn't happen, Jay. With Brent crude so subdued, still the Nifty is not able to outperform. And that's one of the catalysts out there. Got that. Quick view on the dollar index. That showed spurts that it wants to burst up, but then it's cooled off a little bit. What's your take on dollar index? And if we talk about dollar index, obviously we are focusing on the gold as well. No signs of it topping out, at least as of now.
A very, very important point here, Nigel. See, the dollar index has built a base for the last 6 months between 100.3 and 96.2. But the intermediate important resistance is about 99.3. If a dollar index closes about 99.3, there's a real chance that this base that is built over the last 6 months is going to get taken out. But here's the important thing when it comes to related markets like gold and silver. USD JPY cross is clocking a fresh 52-week high today. And the 2024 high is about 161.5 on the USD JPY cross. And that it looks like it's going to get taken out. Here are the contradicting points here. If that gets taken out, the dollar is likely to strengthen a lot. But the reason why USD JPY is probably strengthening is because of the Japanese debt. So that can in turn trigger much higher levels for precious metals. But the dollar index is also strengthening. So how far this relationship is going to play out? Is the dollar index and the precious metals going to rise together? That's a tricky thing to play out. So be very careful in the precious metals place. The medium-term picture is quite strong, but you could see a short-term volatility. So be very careful. Maintain strict trailing stops for your longs if you're long. If you're not long, stay away from the market.
All right, Jay. Thank you so much for joining in. We'll ask you to stay back for your calls on markets forward. But in the meanwhile, let's start wrapping up. It is expiry session, weekly options expiry, and the market ends very close to what the option writers were expecting it to. It was a volatile day. We saw 25,600 at the lower end and 25,900 at the upper end. The market recovered from lows in the last half an hour, led by a couple of these names like ICICI Bank. Eternal did okay. We saw SBI and Reliance as well recover from the lows, though it had been pressurizing the market from the word go. So Reliance as a stock was among the top losers on the Nifty today, at least the top dragger. Among the other top losers was Trent, down 4% after